Today we're diving deep into QuantumScape, a company that, well, could truly electrify the future of energy. Their ambitious vision for solid-state batteries is making waves, but it definitely comes with a unique set of risks and rewards.
Yeah, definitely. And our mission today for you, our listener and fellow investor, is really to cut through the hype around QuantumScape or QS. We want to equip you with a comprehensive understanding of this as an investment opportunity. We'll analyze their cutting-edge technology, scrutinize their pre-commercial financials, assess those inherent risks, and place them firmly within the broader market and competitive landscape. We've basically synthesized a stack of analysis reports and financial data, specifically geared for those navigating the U.S. market to give you the clearest picture possible.
Okay, great. So let's start at the beginning then. What exactly is QuantumScape, and why are they drawing so much attention right now?
Right. So QuantumScape Corporation, they trade as QS on the NYSE. Founded way back in 2010 by Jagdeep Singh and Stanford professor Fritz Prince. They're based out in San Jose, California, and they went public back in August 2020. Their core business is, look, it's entirely focused on developing and commercializing solid-state lithium metal batteries, primarily for electric vehicles, but yeah, other applications are certainly on their radar.
And it's their proprietary tech that really sets them apart, isn't it? What's the core innovation there? What's behind their approach?
Precisely. They're focused on a high-density, completely inorganic, ceramic-based, solid-state electrolyte separator. This is a genuinely revolutionary anode-free design.
Anode-free. Okay, break that down a bit.
Yeah, so in simpler terms, instead of using a traditional graphite anode, lithium metal is directly deposited onto the current collector during charging. This design, theoretically, maximizes energy density while simplifying the battery structure. It's quite elegant if they can make it work at scale.
That sounds like a pretty significant leap. So what are the big advantages they're targeting with this? What are the promises they're making?
Well, they're aiming high, incredibly high energy density, targeting over 800 watt-hours per liter. That could significantly boost EV range, which everyone wants. Rapid charging is another huge goal. We're talking 10 to 15 minutes to get to 80% capacity. Imagine that.
That'd be a game changer.
Absolutely. They also claim a wide operating temperature range, so it maintains significant capacity even way down at -30 Celsius. And critically, they've shown proven resistance to lithium dendrites, those nasty tree-like structures that can cause short circuits, degrade batteries.
Yeah, the big killer for lithium metal batteries usually.
Exactly. And they've demonstrated stability with lithium metal, which is, frankly, a major engineering hurdle for these anode-free designs.
Okay, the promises are definitely compelling.
Yeah.
But how much of this is actually proven reality versus, still on the roadmap? What hurdles are left before we see this everywhere?
And you've hit the crucial point right there. While the tech advancements are, look, they're significant, the path to mass commercialization is still, well, it's still being navigated, which actually leads us directly into their financial picture. And that's where you see the reality of a pre-commercial company starkly laid out.
Yeah, it's easy to get swept up in the tech excitement. But for investors, the key question is always, what do the books look like? And with QuantumScape, it's a pretty unique picture, isn't it? What's the core financial reality here?
It's critical to understand this first key insight. QuantumScape, like many companies at this pre-commercial stage, has virtually no revenue. Zero. And it's operating at a loss. So you're investing entirely in future potential, not current earnings. That's the bet. For their 2025 Q1 financials, just to give you the numbers, they reported a net loss of $114.4 million on a GAAP basis. That's generally accepted accounting principles. And their adjusted EBITDA loss earnings before interest, taxes, depreciation, amortization was $64.6 million. That's basically their operational cash burn, stripping out non-cash stuff.
Okay, $114 million net loss, $64 million adjusted EBITDA loss. What about operating expenses and CapEx? And, maybe most importantly, how much cash do they have left? What's the runway look like?
Right. Operating expenses came in at $123.6 million, and capital expenditure, CapEx, was quite low at $5.8 million for the quarter. But the most crucial point, like you said, for a company at this stage is their cash position. They reported a robust $860.3 million in cash and cash equivalent.
$860 million.
Okay. And based on their current burn rate, that provides operating funds until about mid-2028. So it's a decent runway as they push towards trying to commercialize this thing.
So for investors looking at QS, it really means setting aside the traditional financial playbook almost entirely. What's the specific lens we should be using then? How do you evaluate a company like this if the standard metrics don't apply?
Exactly right. Metrics like the price-to-earnings ratio, PER, well, it's deeply negative, negative 4.3, expected, right? No earnings. Their price-to-book ratio, PBR, is 1.96. Now, that seems high based on assets, but it's because the market is pricing in future expectations, not current book value. Return on equity, ROE, also significantly negative, around negative 39.8%. Look, these numbers are essentially meaningless in the traditional sense because there's no revenue, no profit yet.
So analysts aren't expecting profits anytime soon either.
No. Analysts don't forecast profitability for at least the next 3 years. And even when you see projections like annual revenue growth of 26.4% or earnings growth of 62.2%, those numbers sound impressive, but you have to remember they're starting from basically zero. You are buying into a future vision, plain and simple.
Okay, so what does make the stock move then if it's not quarterly earnings? It sounds like it's much more about news, hitting milestones, market sentiment.
You're absolutely right. That's spot on. When you're dealing with a company like QuantumScape, the stock is extremely sensitive to news, announcements, future-looking developments. On the positive side, major catalysts are things like success in their cell tests, small cells now, plans for larger cells soon. Substantial technological progress is key. For instance, their QSE-5 development, that's their key cell format, and the Cobra production system.
Ah, yes, Cobra. That got some attention.
It did, because it can potentially speed up a critical step, the heat treatment of ceramic separators, by 25 times. That's a huge potential unlock for manufacturing speed. Also, expanding OEM partnerships beyond just Volkswagen is another massive potential positive. It signals broader industry validation, right?
Definitely. But what about the flip side? What are the big red flags or negative factors that could send the stock, tumbling?
Well, the biggest risks are inherent technical challenges and delays. That's number one. The sheer difficulty of perfecting solid-state tech at scale means any unexpected issue, any delay, can hit the stock hard. We've seen allegations of tech hype in the past, and those ongoing challenges like really proving long-term dendrite prevention and ensuring long battery lifespan in real-world conditions. Those are real hurdles.
And competition.
Intense competition. We'll talk more about them later, but other solid-state developers are not sitting still. Funding is another one. They need large-scale capital for R&D and eventually mass production. That could lead to potential share dilution down the road if they need to raise more money. And of course, just simply missing market expectations in their announcements or updates can cause sharp drops. High expectations cut both ways.
Makes sense. Speaking of news, what are some recent headlines that have actually moved the needle for QS stock?
Okay, well, their 2025 Q1 earnings call back on April 30th was important. It confirmed their financials, confirmed that cash runway to mid-2028, which was reassuring, and showed progress on the QSE-5 cells. More recently, July 15th, the stock jumped 8.8% to hit a 52-week high. That seemed fueled by a mix of things, maybe some market association with Tesla chatter, reports of ongoing OEM negotiations beyond VW, and that hype around the Cobra system potential. And just before that, late June, there was a buzz about them having crossed a milestone, indicating market perception of some significant tech development, even if specifics were sparse.
So it really underscores that high volatility driven by sentiment. How should investors even process that kind of market behavior? It sounds exhausting.
It can be, exactly. This is a high-risk, high-reward play where tech news, not earnings, dictates these significant swings. High market expectations for solid-state tech overall leads to these surges on positive hints, while any whiff of delay leads to sharp drops. That recent rally, driven by positive sentiment on their commercialization roadmap. And it's not just news. Institutional freighting, retail investor sentiment, it all greatly impacts supply and demand for the stock. Look at the options market. Expensive premiums suggest traders expect big moves, high volatility around future updates. It's definitely a speculative name right now.
And just to quickly recap on ownership, who are the big backers here?
Volkswagen is the major strategic shareholder, holding around 19%, which reflects that deep partnership. Bill Gates is also a well-known investor, and as of 2024, there were roughly 508.1 million shares outstanding.
Okay, it's clear QuantumScape's journey isn't happening in isolation. Their success is deeply tied to the wider economy and the whole EV industry they're aiming at. What are the key trends shaping the solid-state battery landscape itself right now?
Yeah, the context is huge. The solid-state battery industry as a whole is, well, it's poised for potentially explosive growth. Forecasts suggest it could expand from about $1.1 billion in 2024 with a compound annual growth rate, CAGR, of over 31% between 2025 and 2034. That's massive.
31% CAGR.
It's huge. And electric mobility applications, EVs basically, are set to make up over 60% of that market. So the EV sector is the key driver. We're seeing continuous tech progress across different electrolyte materials, polymer, oxides, sulfide chemistries, all focused on better performance, longer lifespan. And those key goals remain rapid charging, 10, 15 minutes, and better performance in the cold.
And the competition you mentioned earlier.
Yeah.
How crowded is this space getting?
Oh, extremely crowded. You've got major global players like Samsung SDI, Toyota, Solid Power, CATL, BYD. They're all aggressively developing their own solid-state solutions. Samsung SDI, for instance, is often noted for focusing on safety and energy density. Chinese firms like CATL and BYD are known for scaling up fast. This sector is also attracting significant government and private funding worldwide. Strategic partnerships are popping up everywhere, accelerating innovation. It's a real race.
How does the broader EV market outlook feed into this? What's the trend there, making solid state seem so critical?
Well, the underlying EV market continues to show sustained strong growth. We're talking double digits in 2024, 2025. S&P Global Mobility, for example, projects 15.1 million battery electric vehicle sales globally in 2025. That's nearly 17% of the total market. And that share is projected to rise above 40% by 2030.
40% by 2030.
Yeah. It's driven by falling battery prices for conventional lithium-ion, government incentive subsidies, tax breaks, and just the overall global push towards decarbonization. And crucially, automakers are actively prioritizing longer range, lighter weight, and safer batteries. That perfectly highlights why they need something like solid-state tech, which promises to potentially boost range and safety by maybe 60% or more over current batteries.
So a booming potential market for the end product. But what about the building blocks, the supply chain for these advanced batteries? How stable is that foundation?
That's a critical point, and frankly, there's inherent volatility there. Take lithium prices, they were up over 20% last month, but they're still way down year over year from that crazy peak back in December 2022. That price volatility directly hits battery makers' bottom lines. Plus, there are significant supply chain concentration concerns. Key materials like nickel, cobalt, lithium, they're geographically concentrated in just a few countries.
Primarily China for processing, right?
China dominates the primary processing stage, yeah. That raises dependency issues for everyone else. And looking ahead, mining alone probably won't meet the projected demand by 2025 or soon after. So battery recycling is becoming absolutely crucial. You see policies like the EU's mandates for recycled content by 2035. That's about securing future materials.
Right, recycling is key.
Yeah.
Beyond the industry specifics, how do those bigger macroeconomic trends, things like interest rates, inflation, how do they affect a growth stock like QuantumScape?
Macro trends pose pretty significant risks, especially for growth stocks like QS, whose value is so heavily weighted towards future earnings. Interest rate hikes, generally negative. They increase borrowing costs for companies needing capital, like QS, and they tempt investors to shift towards safer, yield-bearing assets away from speculative growth. Inflation drives up raw material costs, potentially squeezing margins, and it can also reduce overall savings and investment capacity in the economy. And recession fears. They weaken overall market sentiment, naturally. Growth stocks tend to get hit harder by fears of slowing future demand. Recent U.S. manufacturing and jobs data, for example, have definitely raised some concerns in the tech investment space.
Okay, so a complex picture. Given that intense competition we touched on, let's maybe zoom in a bit more. Who are QuantumScape's main rivals in this solid-state race? What are their different angles, strengths, weaknesses?
Yeah, let's do a quick rundown of the key players you need to watch. QuantumScape. U.S. We know their angle, anode-free, lithium metal, unique ceramic separator. Strengths, potentially highest energy density, that strong VW partnership, the Cobra process for scaling hopes. Weaknesses, mass production is the big unknown, unproven, real-world performance and lifespan at scale.
Okay, QS. Who else?
Toyota, Japan. They're focused on a sulfide-based electrolyte, and they hold a ton of patents in this space, targeting commercialization maybe 2027, 2028. Strengths, deep automaker expertise, massive financial backing, that huge patent portfolio. Weaknesses, sulfide electrolytes can have instability issues, potential H2S gas risk, complex manufacturing, and Toyota tends to move quite conservatively.
Toyota, got it. How about the Korean players?
Samsung SDI, Korea, also focused on sulfide-based electrolytes, working on high-capacity cathodes. They're talking about a pilot line by 2027, commercialization maybe 2030. Strengths. They're already a major Li-ion battery producer, so they have large-scale manufacturing capability and strong finances. Weaknesses. Same sulfide tech challenges, and that commercialization timeline still feels a bit uncertain.
Okay. Any other U.S. players?
Solid Power, U.S. Another one using sulfide-based electrolytes. They partner with BMW and Ford, focusing heavily on just developing the electrolyte material itself. Strengths. Those close automaker ties, specialization in the core electrolyte tech. Weaknesses, they generally lack in-house production scale, relying on partners, and again, those sulfide tech hurdle.
And the big one from China?
CATL, China. They are a true behemoth, the world's largest battery producer overall. They're looking at diverse, next-gen tech, solid state, semi-solid, even sodium-ion. Strengths. Huge scale, strong Chinese government support, incredibly fast development and scaling capabilities. Weaknesses. Arguably not yet the leader in core solid-state tech itself, and their specific solutions still need ongoing verification and proof.
So quite a few different approaches there.
Yeah, what's fascinating is that QuantumScape's unique anode-free and ceramic separator approach on paper offers the highest theoretical energy density. But the critical question, the absolute key to winning this race, is who can actually be the first to commercially mass-produce a stable, reliable, and cost-effective solid-state battery. That's the multi-billion-dollar question.
Right. It's not just the best lab result. It's who can make millions of them affordably. Okay, so beyond the external market and competitors, what about QuantumScape's own internal capabilities? Do they actually have what it takes internally to pull this off?
Good question. Looking at their R&D, strengths are definitely that extensive patent portfolio they've built over 10+ years. They have an expert team stemming from that Stanford collaboration, top scientists, and they have shown consistent achievement of their roadmap milestones, like the AB0 samples and developing the Cobra process. However, weaknesses. Limited experience in large-scale automotive battery production. They face what's often called the valley of death, that huge, difficult gap between R&D success and mass manufacturing success.
The Valley of Death. Yeah, that captures the challenge perfectly. It really highlights that massive leap from a scientific breakthrough to actually making it work reliably and cheaply at industrial scale, doesn't it? So how are they planning to bridge that specific gap? How do they get from lab to factory floor?
Well, their production and scale-up capabilities are obviously critical here. A major stated strength is that Cobra process we mentioned. If it works as advertised, 25x faster heat treatment, smaller factory footprint that could dramatically improve production efficiency, they're also shifting strategy towards a capital-light licensing model.
Licensing. So they provide the tech, others build the factories.
Essentially, yes. This reduces their upfront investment burden and theoretically aims for faster market spread by leveraging partners' manufacturing capabilities. The weakness, however, is stark. They have no actual large-scale production experience themselves. Scaling from a lab bench or pilot line to a gigafactory is a monumental hurdle filled with unforeseen problems and that licensing model. It makes them heavily reliant on their partners' capabilities and execution. If the partners stumble, QS stumbles.
It makes sense. And speaking of partners, Volkswagen is obviously the huge anchor, but is relying so heavily on one partner risky. What's the strategy for bringing others on board, and what are the risks inherent in that licensing model itself?
Volkswagen, through their battery arm PowerCo, is undoubtedly a strong anchor partner. It provides crucial early validation and, importantly, funding. Their ongoing discussions with new OEMs, which they hint at, indicate potential for expansion and that diversification is absolutely crucial for long-term stability. But yes, the current high reliance on VW is a weakness. They definitely need broader customer diversification. And the licensing model, while capital light for QS, also means their revenue depends entirely on partner production volumes and sales success. Plus, there are always inherent risks around protecting intellectual property when you license it out. IP leakage is a concern.
Right. Protecting that core IP must be absolutely paramount, especially with so many global players racing alongside them.
Absolutely critical. Their strong core patent portfolio, built carefully over years of focused R&D, is arguably one of our most significant assets. It creates that technological moat, that barrier to entry. However, the reality is that global patent infringement issues are common in fast-moving tech sectors, particularly with rapid advancements potentially coming from Chinese competitors. It requires continuous vigilance and a robust legal strategy to defend that IP.
Okay, so pulling this all together, to sum it up, QuantumScape clearly holds immense potential, maybe revolutionary potential. But that comes hand in hand with immense risk. It really is the definition of a high-risk, high-return proposition, isn't it?
That's the absolute essence of it, especially for U.S. investors considering this stock right now. Let's recap the strengths. Truly innovative solid-state battery technology with demonstrated progress, strong foundational partnerships like Volkswagen, and importantly, a solid cash position giving them runway until mid-2028. But the weaknesses and risks are just as stark. Huge commercialization uncertainty, still virtually no revenue and persistent losses, that high stock volatility we discussed, and frankly, fierce competition breathing down their neck. So, who is the stock for? It's best suited for high-risk, high-reward investors, people who have a strong conviction about the future of solid-state battery technology and are prepared, psychologically and financially, to potentially endure significant volatility and even losses along the way.
And for those investors who fit that profile, what are the absolute key things they should be monitoring? What signals should they watch for?
Okay, 5 key things to watch closely. 1. Technology progress. Watch for actual, tangible advancements in their QSE-5 cells and the Cobra process. Look for concrete steps towards mass production, not just announcements. 2. Partnership expansion. Look for signings of new, major OEM collaborations beyond Volkswagen. That's crucial validation. 3. Funding strategy. Keep a close eye on their future capital raising plans. Large-scale production will require substantial additional investment eventually. How will they get it? Dilution risk. 4. Competitive landscape. Continuously benchmark QS's progress against key competitors like Samsung SDI, Toyota, Solid Power, CATL, who is hitting milestones faster. 5. Macroeconomic environment. Understand how interest rates, inflation, recession fears are impacting growth stocks generally because QS will be sensitive to those broader trends.
That's a great checklist.
And it raises an important point about approach. For a company like QuantumScape, it really demands a long-term perspective. Instead of reacting to every short-term stock price fluctuation, investors should focus on the fundamentals. Is the company consistently meeting its technical milestones? Is it securing the necessary production capabilities, either directly or via partners? Is it successfully expanding its customer base? And, as always, do your own thorough due diligence. Review the latest SEC filings, read the technical reports, look at various analyst opinions, and critically align any investment decision with your own personal risk tolerance and financial goals.
QuantumScape is truly a fascinating case study, a company really striving to leapfrog current technology with the potential to fundamentally redefine the electric vehicle landscape. But as we've explored today, that journey from the lab to the mass market is absolutely fraught with challenges, and only time will tell who ultimately wins this incredibly high-stakes race. We really hope this deep dive has given you a clearer, more informed perspective on QuantumScape and the exciting but definitely risky world of advanced battery technology. If this was helpful, please do subscribe. We're always here to help you unpack the most interesting and important topics impacting your investments.